Hello, everyone. Welcome to training on GASB 87 for leases. For anyone who doesn't know me, my name is Rachel Kometz, and I have been working with OMB since 2008. I would like to start with thanking you for taking the time to watch this presentation to better prepare yourself for the upcoming changes of GASB 87 on leases. GASB 87 will be effective for fiscal year 2022, which means we will begin recording all leases under this new method beginning July 1st, 2021. Today's agenda will consist of what's changing with GASB 87, the implementation steps OMB is planning to take, what the new definition of a lease is according to GASB 87, key terms you will need to know in order to fill out the lease population survey for OMB, and finally, how to complete the lease population survey you have received. So let's first look at what is changing with GASB 87. Prior to GASB 87, leases were recognized as operating leases or capital leases. This is all going away. GASB 87 is establishing a single model for lease accounting based on the principle that leases are financings of the right to use an asset. This is going to be a big change for most state agencies. So what does this all mean for state agencies? OMB needs agencies' assistance to identify the state's lease population. Agencies need to participate in OMB's GASB 87 training and familiarize themselves with the changes, which you are doing by watching this training. Agencies will be responsible for analyzing their contract to determine if they meet the new lease definition, which you will need to do to fill out our lease population survey. OMB is here to assist every step of the way. Please contact us with any questions. OMB plans to implement GASB 87 through these 3 steps. Agencies would have received the lease population survey with this training. This survey will need to be completed by all agencies to determine your lease population. This is a preliminary survey, so keep tabs on your lease contracts, as you will need more information as we get the GASB implemented. OMB will assess the survey results in order to set a capitalization threshold and evaluate our software solution needs. Once the threshold is set and the solution is chosen, OMB will be requesting the contract details needed for the financial statements. So let's get started. So what is a lease? A lease, according to GASB 87, is defined as a contract that conveys control of the right to use another entity's non-financial asset as specified in the contract for a period of time in an exchange or exchange-like transaction. What a mouthful that is. Let's break it down some. A lease must be a contract. The control of the right to use includes both the right to obtain the present service capacity and the right to determine the nature and manner of the use. Some examples of non-financial assets include buildings, land, vehicles, and equipment. A specific period of time means it must have an end date. The most challenging part of this definition is determining if you have the right to use an asset or if you have control of the asset. Sometimes defining control of an asset or the right to use an asset is easier to explain by stating what does not have control. For example, the state would not have control if there was a land lease where your agency could place something on the land, but other parties are also able to use the land for other purposes. An example of when the state would have control would be if an agency leases a bobcat to remove snow from the parking lots from October to April for 2 years. The agency obtains the present service capacity during the lease term and the nature and manner in which the bobcat is used. We should note that the control criteria is not limited to contracts that convey substantially all of the present service capacity from use of the underlying asset. Right to use lease assets include rights to use underlying assets for portions of time, such as certain days each week or certain hours each day. Here is an example of a lease that could happen at any agency within the state. If an agency were to enter into a 5-year easement contract with a landowner for full access to their land between September 1st through December 31st each year, would this meet the definition of a lease according to GASB 87? Yes, this would meet the definition of a lease because the agency is determining the manner and use of the land and is obtaining the present service capacity of the land between September 1st through December 31st. As with every GASB, there are always some exclusions. Here is a list of certain contracts or leases that will be excluded from the implementation of GASB 87. Our first item listed here is intangible assets, which include copyrights, mineral rights, or software and patents. You may want to flag your software contracts as these items are excluded from GASB 87, but will be covered in an upcoming GASB, which will be effective for fiscal year 2023 and will be very similar to GASB 87 requirements. Other exclusions are supply contracts and leases with the underlying asset financed with outstanding conduit debt, as well as short-term leases, which are leases with a maximum possible term of 12 months to extend, regardless of the probability of being exercised. We will go over an example of a short-term lease on the next slide. Leases between state agencies are excluded. Service contracts are excluded from GASB 87. However, if the service contract contains both a lease component and a service component, it would need to be included. We believe we could possibly see some embedded leases in our service contracts. We will go into further detail on embedded leases later on in this training. Leases that transfer ownership of the underlying asset to the lessee by the end of the contract and have no termination options would also be excluded. Leases and holdover or rolling month-to-month leases are excluded. Since these leases can be canceled at any time by either party, they do not meet the definition of a lease under GASB 87. Also, inventory and biological assets are excluded. As we mentioned in the previous slide, short-term leases will not be included for GASB 87. In this example, Agency A enters into a lease with a 6-month non-cancelable period with an option to extend for another 12 months after the 6-month period. The agency is reasonably certain they will not exercise the option to extend the lease past the 6 months. Is this a short-term lease? No. This lease will not qualify as a short-term lease and will need to be reported to us under GASB 87. The reason this is because a short-term lease has a maximum possible term under the lease of 12 months, regardless of the probability of the option being exercised. So let's talk more about determining your lease term. Your lease term is determined by adding together the non-cancelable lease period, the optional renewal periods that the lessee or lessor is reasonably certain to exercise, and the periods after an optional termination date if the lessee or lessor is reasonably certain not to exercise the termination option. To be reasonably certain means to be almost certain to exercise the option of the lease. Reasonably certain criteria is a higher threshold than expected or more likely than not. Agencies should document their logic behind their determination in case they need to explain or provide this support during an audit. Several factors can be used in making your determination on your leased assets. For example, you could compare your lease to the market to determine if the contract terms for the renewal period are fair based on the current market. You should review your contract terms to see if there are any incentives or disincentive to terminating the lease. For example, termination penalties, relocation costs, or negotiation costs. Maybe whether the asset is essential for providing government services could come into this determination, or additional cost factors like cost and time of the procurement process and funds being appropriated to continue the lease. Here are a couple of items that should not be considered in your lease term. Most, if not all, state contracts will include a clause for fiscal funding or cancellation, which allows the state's lessees to cancel a lease if the government does not appropriate funds for the lease payments. This type of clause should affect the lease term only if it is reasonably certain that the clause will be exercised. Also, the lease term excludes periods in which both the lessee and lessor have options to terminate, regardless of probability, as we have previously discussed with the holdover leases. Here is an example of how to determine the lease term of a contract. In this example, an agency entered into a contract with Xerox to lease a copier. The contract has a non-cancelable period of 3 years and has 2 renewal options, each for 1 year. After reviewing all of the relevant factors, the agency determined that they were reasonably certain they will exercise the option to extend both years. After the 2-year renewals, the lease will switch to a month-to-month contract until the copier is returned to the contractor. In this example, the lease term would be 5 years. 3 years for the non-cancelable period, plus the 2 years that the agency is reasonably certain to extend the contract. The month-to-month portion of the contract would not be considered in determining the lease terms because either party can terminate the contract with a 30-day written notice. Next, we are going to be going over some key terms that you'll need to be aware of in order to fill out the lease population survey you have received. These items in your contracts we will need to know about to help us better assess what kind of contracts we have in state government and what kind of software we may need to report the information for the annual report. These items you will also need to know because we will need the information when determining the lease liability. Additional training or information will be provided on how to account for these items at a later date. Lease incentives reduce the amount that a lessee is required to pay for a lease. A lease incentive is equivalent to a rebate or discount and includes assumptions of a lessee's pre-existing lease obligations to a third party, other reimbursement of lessee costs, rent holidays, and reductions of interest or principal charges by the lessor. We will be asking about purchase options. Does your lease contract have an option to purchase the asset? If the answer is yes, we will be asking if you are reasonably certain you will exercise the option to purchase. We will also be asking about penalties for terminating your lease contract. Variable lease payments we will discuss further on the next slide. We will ask if you have multiple leased assets under one contract. And finally, we will also ask about non-lease components, which could be service agreements, utilities, or common area maintenance. We will also go further into this item on a little later in the training. There are three types of variable lease payments according to the GASB: fixed in substance, based on an index or rate, and based on usage or future performance. A fixed in substance payment would have a minimum payment amount. For example, an agency would sign a contract with a printer supplies vendor. The contract states the agency pays 1 cent a page or $500 a month, whichever is greater. The minimum payment of $500 is a fixed substance payment. The based on an index or rate payments are based on set common rates or an index, such as the Consumer Price Index. For example, an agency signs a contract with Abigail Inc. for office space in Cass County. The rent is $3,000 per month and increases annually with the Consumer Price Index. The variable payments include the $3,000 monthly rent plus the Consumer Price Index rate as of the lease end date. The third type of variable lease payments is based on usage or future performance payments. These types of payments depend on a future performance, such as reaching a certain threshold or usage. For example, an agency signs a contract with Bobcat to rent an excavator for $50 per hour. Each excavator rented in the past 10 years was used for over $500 hours per year. A new construction project requires double the amount of excavator work needed over the course of the contract. The variable payment amount to be included in the measurement is $0 since payments are based on disincentive future usage. Leases may contain multiple lease components. For example, multiple pieces of equipment, different lease terms, or different major asset class. Leases can also contain non-lease components. When evaluating your contracts for multiple leases, you may notice you have some that contain hardware or software leases. You are going to want to keep a list of these contracts as they are excluded from this GASB, but it will be covered later at a later time. As mentioned earlier, non-lease components can be service agreements, utilities, or common area maintenance. Common area maintenance can include maintenance and repairs, cleaning up common areas, security for property, property tax, and/or property insurance. While reviewing your contracts, please identify any individual components that are included in the contract. Ideally, all of these components would be identified in the contract, and we would just need to agree the allocation appears reasonable. I am expecting more of these items not being specifically identified in the contracts, and then we'll be looking at the second two bullets, where we will use our professional judgment to allocate the components, or if we determine it's not practical to determine a best estimate, we will account for these components within the single lease unit. In our survey, we will be asking for any of these known costs in your contracts. We are also giving you the option to put undeterminable if you cannot allocate a cost to them. Here are some other contract terms we will be asking about on the survey. We don't anticipate these to be common within the state. These definitions can also be found in the survey we are asking you to fill out. Please review the definitions when you fill out the survey, and if you have any questions while reviewing these, please contact OMB, and we can help make any determination for you. With you. What is an embedded lease? As we discussed earlier, you may find embedded leases in some of your contracts. An embedded lease is a lease agreement that exists within a contract. Since a lease is now defined as a contract that conveys the right to control the identified asset for a period of time, we now need to consider if the contracts contain an identified asset and if the right to control that asset is determined by the lessee. Identification of this asset can be explicit or implicit. An explicit identification is when the underlying asset is actually identified in the service contract. For instance, a transportation service contract may require the supplier of the service to use truck number 3340 to deliver the customer goods. On the other hand, an asset is implicitly identified when the only way the supplier can satisfy their obligations under the contract is to utilize that asset. Some things to consider when you are looking for an embedded lease is that this is a new concept and service contracts can contain embedded leases. Embedded leases may be in existing contracts and not previously identified. A contract that contains an embedded lease may not use the term lease or rent. Key terms in your contract that could signify an embedded lease would include exclusive use, solely, or possibly an identification number. There are several types of contracts that you could find an embedded lease: advertising, service, transportation, construction, warehousing, logistics, and data center service agreements. An embedded lease is an extremely complicated topic, so we would like to provide a couple of examples to try and help explain what we would be looking for. In our first example of an embedded lease, we have a university with multiple campuses that require students, employees, and visitors to travel between campuses and to parking lots that are far apart. The university engages the shuttle service to shuttle people around the campus. The shuttle service provides buses to more people from point A to point B. The university is able to dictate the routes, frequency, and hours of operation for the buses. According to GASB 87, this situation will qualify as a lease because University A controls the right to use the buses and because they control the manner and use of the buses. The fact that shuttle service operates and maintains the buses does not affect this conclusion. Does this service contract contain an embedded lease? In this example, we are looking at a contract for a courier service to transport mail or packages from one building to another. In this example, the contract states the courier must pick up packages at all sites daily every Monday through Friday between 8 and 5. There are other detailed instructions on pickup and delivery times. The courier service has a vehicle dedicated solely for this contract. So would this contract qualify as a lease under GASB 87? Yes, we would say this is an embedded lease because the vehicle used in the contract is solely for making deliveries under the state's terms. Therefore, the agency controls the right to use the vehicle. Along with this training, each of you should have received the lease population survey. This is how OMB is planning to acquire a population of all leases at state agencies. Here is the lease population survey that all agencies have received. Filling out the form itself should be fairly simple. You will find 3 tabs to the survey. The first tab provides you with instructions and purpose of the survey. A tip to help you fill out the survey and see the instructions as you fill it out, we suggest you click View, New Window in Excel so you can see 2 copies of the Excel document open as you answer the questions. You'll see the 1 and the 2, and then you can click on this tab and see the form and also see this tab with the instructions. On this first tab, all you need to do is fill in your business unit and who prepared the survey, so we know who to call if we have any questions as we review the survey results. Please review all instructions before you begin to fill out the second tab. The second tab to the survey is where we will begin asking for all leases your agency has where you are the lessee or have a lease payable. Please report all contract or agreements over $1 that meet the definition of a lease. On this second tab, your business unit number and name, as well as who prepared the survey, will carry over from the first tab. On this spreadsheet, you will be asked to fill in your basic information on your leases. Column A is looking for an identifier from your agency. This will be chosen by you. Column B is asking for a brief description of the lease. Column C is asking you to provide the current 1-year contract amount for this lease. This will be all the payments you make in a 12-month period. Column D is asking for your contract if your contract has any extensions or renewals with a simple yes or no option. Column E is asking for how many months your extensions or renewals are for. Please enter the number of months here. Column F is asking if your lease has any incentives with its contract. At this time, we are just looking for a simple yes or no on this option. Column G is asking if your contract has a purchase option. From here, you will select no, yes, you are reasonably certain the asset will be purchased, or yes, not likely to be purchased. Column H is asking for variable payments. Again, here you will have some options on what to select, with no being an option. Definitions can be found on the instructions tab for anything you need more clarification on with this question. Column I is asking if your contract has any penalties for terminating your contract, with a yes or no option to select. Column J is asking if you have any leases with multiple assets under one contract. Again, we are asking for a yes or no. And finally, column K is asking for non-lease components. Please enter the value of your non-lease components here that would be paid in the first year of lease payments. If you can't determine the cost of the non-lease components, please mark unidentifiable. If there would be no non-lease components in your contract, please mark not applicable or NA. The third tab is asking some other miscellaneous questions we will need to know for this standard. Questions 1 through 4 on this tab are looking for a yes or no, similar to many other annual report closing packages you have submitted. Question 1 is asking, does your agency earn lease revenue? Here we are merely asking if you lease out any property or any items where you are the lessor. Definitions for questions 2 and 3 can be found by hovering over the red triangle next to the question. If you have any questions on these definitions or whether or not you could possibly have this, please contact OMB and we can help assess this information. Question 4 is just asking if you ever modify your leases after you've originally signed them. This is also going to help us determine what kind of lease software we may need. That will complete the lease population survey. So we will get back over to the training. So things to think about. Please keep in mind that leases previously reported as operating leases could now be reported as financing leases. Contracts that weren't previously reported as leases can now meet the definition of a lease. Another thing to keep in mind is who administers contracts at your agency. Could they help determine if there are contracts that now meet the definition of a lease under the new standard? Have questions about GASB 87? Please contact myself, Rachel Kometz, or Crystal Hogarth at OMB. Or you can directly email us at acfr@nd.gov. If that is the first time you're seeing our email, it is changing this year. We will be sending out a notice about that if you haven't already received it. Thank you. We appreciate you taking the time to watch this training and look forward to working with you throughout the GASB 87 implementation process.